Hey everybody, Stephanie Skrzowski here. I am the founder and CEO of 100 Degrees Consulting, and I'm a chief financial officer. So I help leaders of businesses and nonprofits better understand, use, and communicate their numbers. So I'm really excited today to talk about how to tell a better story of your organization with your financials. So I'm going to minimize my video here and let's dive right in. So your numbers story matters, but why do the numbers matter? Why is it important to tell the story with your numbers and to share your numbers with people inside and outside of your organization? Well, first of all, transparency about your financials really gives people a deeper sense of ownership about your organization. If they know the financial health, then they're going to really feel like they have a stake in the game. And that is going to lead to more engagement, increased engagement with everybody in your organization. Because if they feel like they sort of own a part of what your nonprofit is doing and the financial health of your organization, they're going to be all in 110% to make sure that the work they're doing contributes to the bigger picture. So transparency about your numbers leads to greater ownership and ultimately greater engagement for your employees, your stakeholders, your donors. So who should know your story? When we're talking about telling the story of your organization with the numbers, who are we talking about telling this story to? So we have multiple different types of stakeholders, right? You have your board, your sort of governance body that oversees the organization. They should definitely know your story. Staff, and then you have the donors, public, volunteers, any stakeholders sort of outside of that inner circle. So what's in a good story? When I'm talking about telling the story of your numbers, what exactly am I talking about and what type of information do you need to include? So there are a couple of pieces that I think organizations often forget. So when we're telling the story of our numbers, we want to include some context around it. Otherwise, people aren't going to understand. And so along with the actual numbers, we want to give them a sense of our strategy, where, what's sort of the background of why we do what we do, and our goals. Where are we going? So for example, if we are sharing our, months of cash on hand, that specific financial metric that we'll talk about in a moment, if we're sharing that with our our board, for example, they may want to know, well, why did we want to have 9 months of cash on hand? Well, that ties into our goal of being able to expand to a new program. So that kind of thing, we definitely want to give some context around the numbers. So that's what I'm talking about when I'm saying we want to share our strategy and goals as well. Okay, so how do we actually share our story? What does this actually mean? Are we just giving our balance sheet and our income statement to, anybody who asks for it, and that's what I'm talking about? Not exactly. So there are a couple different ways that we will share our story with different groups of people, and we'll get into this a little bit more later. So you obviously want to share your story with the board. So what I recommend for the board is really a high-level dashboard, a snapshot that's something visual and graphic that they'll really understand in a quick second where the organization is. And then, of course, your standard financial statements. It's very important for the board to have those as well. So your staff, now not everybody on your team is going to be as well versed in the balance sheet and the income statement as you are. And so we really want to give them information that they're going to be able to digest and understand. So I totally recommend high level dashboards for the staff. As much, sort of pictures and imagery and graphics as we can show them will really help them feel connected to the financials. And finally, donors, the public. So obviously we have our annual report, the Form 990, our audited financials. And the annual report is really an opportunity to share some of this sort of graphical displays of data and information. And I think that's a great way to tell your story to that group. So let's dig into the numbers. So what we're going to do today is look at 5 key financial reports that your organization probably already is doing, or at least a version of these. And I'm going to show you a couple metrics that you can calculate using each of these reports that will help deepen that story that you're telling about your numbers. Okay, so these are very basic reports. You should be able to get them from any accounting software. And I'm going to show you really just how to go a couple steps deeper. So let's dive right in. So we've got 5 reports here: a comparative income statement, a comparative balance sheet, a budget versus actuals, an income statement by class, and a cash flow. So we're going to get deep into each one. Let's dive right in. So your comparative income statement. One of the areas that I see nonprofits all the time sort of missing the mark on is they will run an income statement for whatever period they're looking at. So it looks like in this case, we're looking at Q4 2017, but that's all they'll have on the page. So I have no idea by looking at that report for just Q4 2017 if how they did was good or bad, if they've grown or shrank, if we're on target or not. And so the comparative piece of this is what's really important. So you'll see that we have Q4 2017 compared to Q4 of the prior year, 2016. So what we can see here are, changes year over year. Have we grown? Have we decreased? Where are we on program expenses versus salaries, etc.? So it's important to have the comparison piece. Now, let's look at a couple different metrics that we can look at from this report. So number 1 is revenue diversity. It's really important to know how much of our revenue is coming from each different source. So if we pop back up here, it looks like in this case, they only have one source of revenue that's contributed support, and then investment income is very minimal. But what we want to look at on revenue diversity is we don't want to put all of our eggs in one basket, right? Like we don't want to be receiving 90% of our funds from one particular foundation or one government grant, because what if that goes away? That's a risk area. So we want to check our revenue diversity and make sure we're getting at least a bit of revenue from multiple different sources. And I have a calculator. I didn't mention this yet, but I have an Excel calculator, a template that you can pop your numbers right into, and it's going to give you the answers to all of these metrics. So basically, you'll get the metrics without the math. So I will drop a link below so you can grab that. So we also want to look at revenue and expense growth from this income statement. So again, we can see, for example, in this period, last year they raised $128,000. This year they only raised $73,000. So we've had a decrease of 43%. So if I were looking at this, I'd want to know why. And so again, this is a place where you can sort of highlight the strategy and the goals and what's going on to explain some of the changes. And then finally, your burn rate is another metric that you can look at from this income statement. So your burn rate is your expenses per month. And so you take your total expenses for the period divided by the number of months. So again, in this case, we'd look at, okay, it looks like we spent about $100,000 over the course of 3 months. And so our burn rate for this period is about $33,000 a month. So let's move on to the comparative balance sheet. Again, nonprofits all the time will send me their financial statements, but they'll just send me a snapshot of the current period for the balance sheet with no point of comparison. So I have no idea, is this good, or is our cash balance good? Is it bad? I have no idea. So again, here, it looks like we're looking as of March 31st, 2018, and we're looking at the prior period, December 31st, 2017. So we're looking back at year end in comparison to where we are now. So in this case, you'll see their bank accounts were about $60,000 at the end of the year. Now we're about $70,000, an increase of about 16%. So, okay, it sounds like we're kind of on the right track there. But let's dive into some of the metrics here. So again, we're looking at months of cash on hand, right? So when we look at our balance sheet, we have our assets at the top. So our cash, receivables, fixed assets, and cash is something I really like to focus on because a lot of nonprofits get themselves to a point where cash becomes very, very tight. So it's important to look at this on a regular basis. So months of cash on hand, we take our total cash balance divided by that monthly burn rate that we just came up with. So if we looked at this example, they've got $70,000 in the bank, and we determined that their burn rate was about $30,000. And so they have maybe, 2.5 months of cash on hand. Ideally, we're wanting like 3 to 6 months, so they might be a little bit low here. Another important metric that I see a lot of organizations kind of forget about is looking at receivables, and specifically the time to collect receivables. So a lot of organizations that do get into a bit of a cash crunch, it's because they are not collecting on their pledges fast enough. And they don't know that because they're not doing this calculation, right? So we will calculate how long does it take us from the moment that we receive a pledge from a donor to actually get that cash in hand. So this is like a 2-part formula here. And again, the workbook that I mentioned does this easy peasy for you, so no math needed. But you take, if you're looking at, say, a year-long period, you take all of the income, all of the revenue for that whole year, and you divide it by the average balance in accounts receivable over those 12 months, right? So you look at a balance sheet for each month, look at AR, the AR balance, and take the average of that. So total income divided by your average AR balance, and you're gonna get a number there. Then you take 365 days divided by that number that you just calculated, and that's your time to collect receivables. So I did this with an organization, and they thought they were, collecting on their pledges, within like a month or two. It turned out that their time to collect receivables was 180 days. 6 months it took them to bring some of these pledges in the door. And that sort of solved the mystery of why they kept having this cash crunch. So again, this is a very important metric to know. Next, asset and liability growth. And we're just looking at variance percentages there. So we can see from this time period, looks like their assets have grown about 13%. Liabilities have only grown 3%, which is good. And so it's good to know, are we trending up? Are we trending down? Why? And what needs to change? And finally, your quick ratio. And this measures your ability to pay your debts. So you take your current assets up here, current assets of 637 divided by your current liabilities of 167. And you make sure basically you want to have several times your current liabilities up in assets. So in this case, it looks like, yeah, they only owe about 167, but they've got about 637 in assets. So they are, they're in good shape. You don't want this number down here, your liabilities, to exceed your assets, because that means you can't pay your debts. Okay, let's keep going. So your budget versus actual report. So I'm assuming if you have an organizational budget, I'm assuming you have entered it into your accounting software. And I'm also assuming that you are running a budget versus actual report on a regular basis. I really hope you are. So in this case, we're looking at a specific time period. Our budget was 1.4 million in revenue. We raised about 1.2 million. So we're under budget by about 200,000. And again, we want to, when we're sharing this, we want to tell the story, because perhaps even though we're under budget by 200,000, maybe it's just timing. And after this period closed, maybe the next day, say September 1st, we received the grant of 200,000 that was supposed to come in the prior period. So it's really important to make sure that we tell the story, sort of the narrative along with the numbers. But here's some metrics we can look at with budget versus actuals. So we always want to look at our revenue and expense growth and variance percentages again, right? So we want to see, for example, personnel expenses, we had budgeted at 594,000. We've actually spent almost 620,000. So we're over budget by about 25K. Why is that? Did we hire people sooner than we thought we would? Really being able to explain these variances is super, super important. Or look here, this flags itself to me because it's quite a high percentage over budget. We've almost doubled what we thought we would do in licenses and fees. Why? Like what happened? What's going on? So as long as you can explain these and explain these variances to your board, to your staff, you're good to go. Okay, so your income statement by class. Now, if you use QuickBooks, either QuickBooks Online or QuickBooks Desktop, you know exactly what I'm talking about when I say class. So QuickBooks in particular uses class as an additional segment or designation to categorize transactions. And so what most organizations do when they're using this class function is they are separating out revenue and expenses by programs, fundraising, and admin. Because as you all know, this statement of functional expenses, both in your audited financials and the 990, wants to see your expenses by each of these categories. We want to know basically how much money we're spending on programs versus fundraising and admin. So I know there's a whole, sort of controversy out there that we should not be focused on spending as little as possible on administration because we need to invest in our organizations and pay our people adequate wages and things like that. But the reality is, like, we need to know these numbers, right? We want to know if for whatever reason we were spending 80% of our expenses on admin, like that would be a red flag. So the goal is not to spend as little as possible, but we want to know because more information is better. So you can run a report in QuickBooks that shows your revenue and expenses by each of these categories. And on the metric side of things, what we want to look at, number one, is cost per program. So this is an interesting calculation that's going to look different for every single organization. So I know an organization that sends students overseas to do service projects. So we want to know what is our cost per student, right? So we will take our total program expenses. Here, we'll take this $403,000 in program expenses divided by the number of students, right? And that will be our cost per student. Or let's see, if we, if we serve, if we have like education programs in different elementary schools, for example, and we want to know what's our cost per program, what's our cost per school, we would take this total program expenses divided by the number of schools or the number of programs that we have to get our cost per program. And this metric is important. A lot of times donors or funders will ask, what is your cost per program? Okay, then we're going to fund 20 programs. And so being able to easily say what your cost per program is great. That's going to help with your funding for sure. And then the other thing we want to look at on this income statement by class is, like I said before, the programs, administration, and fundraising ratios. So what we want to do here is to get our percentage of program expenses, we just take our total expenses for programs, 403, divided by our total expenses overall, 532, and we get 76%. So you want to do that for each of those, and I've just input those here. Again, in the metrics workbook that I have for you, you can just plug the numbers in and it'll calculate the percentages for you, so you don't have to worry about doing any math at all. So this is great. So we can see here that this organization is spending 76% of their funds on programs, 17% is going to fundraising, and 7% to administration. This feels a little bit low on the administration side, but we don't necessarily have the details behind these numbers. But again, we're not aiming for as low as possible. We just want to know so that we can share that information with our stakeholders. Now, cash flow. So this one is a little bit funky because this is not something that will be generated exactly like this from your accounting system. So what I like to do is do both a cash flow report and projections kind of in the same template. I have a great cash flow template as well that I would love to share with you that basically helps you plug in your inflows of cash and your outflows of cash. And so you can see the ending balance for every month and project that out 12 months or more. So you can basically see a cash crunch before it happens. It is brilliant. So anyway, you can grab that below as well. So this is something that I like to do offline in Excel. I do tie it to the statement of cash flows from the accounting system, but I really like to see it a little bit differently. So one thing we can do here is look at if there are any months that our ending cash balance dips below like 3 to 6 months of cash on hand. So if you remember, several slides ago, we calculated our months of cash on hand. And if we set a goal for ourselves, for our organization, and we say we want to always have 6 months of cash on hand, we'll be able to look at this report here and see any given month at the end of the month, are we going to dip below that threshold? Right? So again, grab the cash flow template. I think that'll be really helpful to plug in your opening balance and then what is incoming, your incoming cash receipts every month, what's outgoing, all of your expenses and other cash outlays, and then calculate that ending balance and see where you land. So it looks like here you can see in May, for example, their cash balance dips pretty low in May. So I'd want to say, okay, what's going on? Are there things in the outlays, money that we had planned on spending that we could perhaps defer to June when we have a higher income month? So that helps you sort of get a deeper insight and you can make changes before you have any issues. Okay, so just to recap, we've got our 5 key financial reports, 4 of which are super easy to pull from your accounting system: your comparative income statement, comparative balance sheet, budget versus actuals, income statement by class, and your cash flow, which I have a template for. So now that we have all of this information, probably more information than you need at this point, how do you actually build your story and tell the story of your financials? So there are a couple places that I see organizations getting stuck all the time. So I'm just going to call them out right now so we can talk about it and address it. So first is figuring out how to pull the reports from your accounting system. So like I said, the first 4 reports are standard in any accounting package that you have. So that should not be an issue to pull those. It might take a little while to kind of figure out what months you're looking at and how to add the comparisons in there, but it's very, very simple. So I promise you that those reports are in there. You might just have to hunt for them. So another place you might get stuck is navigating through the metrics calculations. I know I just ran through probably 20 equations really fast, but like I said, I have this metrics calculator workbook that will help you. You just input your numbers and it calculates it for you. So you want to know how many months of cash on hand you have. All I'm going to ask you to do is enter your monthly expenses, your cash balance, and boom, you have the number of months of cash on hand. So definitely download that. And then the last place you might get stuck is providing some explanations and insights around like why this is happening. And so what I recommend there is just taking a step back and kind of doing a recap of what's going on in your organization for the time period that you're looking at. So if we're looking at Q4, what happened in Q4? Oh, we lost a couple of staff members, or maybe we hired a few new people and started a new program, and oh, that's probably why we're over budget. So take yourself out of your numbers and think about sort of a recap of what's happened in your organization for the time period you're looking at. Now, your next steps. I've got some action items for you. First, I want you to run the financial statements that I talked about. Then I want you to use our metrics calculator and find insights in the financials. Even if it's like 2 insights, you know that cash is usually an issue for you in Q4. We'll run those cash metrics and that should give you some new information on how to use your numbers and make changes and really create a difference in the organization. And then the next step is to create a financial dashboard. I want you to do this, and I'm going to show you a couple examples now. Okay, so I've got 3 examples to show you today of different ways that you can visualize your data so it's more interesting and it means more and people really understand it and grasp it in a deeper way. Because remember, transparency in your organization on your financials leads to greater ownership and really greater engagement for your employees, your stakeholders. So let's give them the information in an easy to digest way. So this example, we're looking at somebody's, an organization's balance sheet, and we're looking as of September 2017, and it looks like we're looking at their quarterly cash balance over these quarters. So the way that, our goal here is to really show sort of the cash trends. And it looks like we had a big jump in Q1 of 2017, and then we're sort of dipping low again. And then if this were to continue, it'd be interesting to see if they had another jump in Q1 of 2018. And so in addition to the graphic here, we've also got a couple of talking points because the graphic is usually not enough to tell the whole story. So it looks like our current cash balance is enough to cover 5 months of operating expenses. Okay, so that's really helpful to know because I wouldn't know, is 28,000 good? Is that bad? I don't know. 5 months of operating expenses. And cash balance has grown 81% since this time last year. Okay, well, that's pretty good to know. Our time to collect AR is 60 days. So that means it's taking us 2 months to collect on any pledges that are coming our way. And so let's discuss our AR collection process to decrease this number. So again, we've got a couple extra insights in here that we can see and use to help us make some changes and increase our cash balance. Okay, here is another financial dashboard. In this one, it looks like we're looking at an income statement and both the revenue and expenses over a long period of time. It looks like from 99 to 2017. So it looks like what we're showing here is our revenue trend. Revenue has increased steadily over the last 19 years, plus we are up 500% in the last 10 years and 67% in the last 5 years. And then flipping to the expense side, it looks like our expenses have increased proportionately to revenue. So I think this is interesting. We are, instead of just giving someone a spreadsheet that shows our revenue and expense numbers over the course of this time period, we're showing them graphically. They can see, okay, we've had a couple spikes, but looks like we've had a couple dips as well. What happened in 2017? Why did we have such a huge jump there, right? Okay, and finally, this financial dashboard sort of includes, we're looking at 2018 revenue year to date, and we're looking at it looks like in a very consolidated way. And so instead of showing a whole ton of detail, we're still showing numbers. We're showing them in the thousands, so this is 275,000. We're showing them in a more condensed way, and we're looking at budget versus actual. So our budget was 437,000. We actually had 476,000 in revenue, so we're up 9%. That's great. We're also comparing to 2017, prior year. So last year, same period, we only raised 261, so we're up 82% over last year. And then we've got some key insights down here that explains, again, gives a little more background on the numbers. Why did we exceed the 2018 budget? Well, we got an unexpected foundation gift. Why are we under budget in individual giving? Well, it looks like it's due to the timing of our spring campaign. Maybe we thought we were going to do it in March, but we're actually doing it in April. So I think this is really helpful as well because we do have some numbers. So those really heavy numbers, people, they've got it on there. They can look at the numbers, but we've also got some explanation around it in a very simple, easy to digest format. All right, so let's just recap really quickly some insights that we gained today. So your number story matters. It's really important to be able to pull these insights out of your financials. Why? Because transparency is going to lead to greater engagement. And don't you want your donors to be more engaged with your organization? I definitely think you should. So the second insight is digging into the numbers, understanding and calculating key metrics. So I went over a lot of metrics really quickly today, but like I said, download our metrics calculator template and you'll be able to plug your numbers in and get all of this insight really easily and really quickly. And the third key insight from today is building your story and creating a dashboard that really visualizes this information in an interesting and engaging way and include some of these key metrics that we talked about. So that's all I've got today. Again, below you will be able to grab the financial metric calculator as well as the cash flow template I mentioned. My email address is right here, Stephanie@100degreesconsulting.com. And just website 100degreesconsulting.com. I'm so glad you were able to join us today. I hope this was super useful, and shoot me a note if you have any questions, but download those workbooks and calculators. They will be so helpful for you. Thanks.